What's up, everybody? I'm on my vacation in Turks and Caicos, but I gotta make a video because I gotta keep the algorithm moving. On the weekends, I like to talk about something not to do with Palantir, so I want to talk about the general economy and what plays I'm currently doing with the stock market. I did a full video the other day, like the state of the economy. It's like a 45-minute. I did a live and a video if you guys want to check it out. But let me recap a couple of things. We came in hotter than expected with CPI. We came in hotter than expected with PPI, and we came in hotter than expected with PCE. Next month is going to be the next Federal Open Market Committee, and we're going to find out how much basis points the Federal Reserve is going to raise the interest rates. Think about it. The whole time we thought that inflation's under control, and then the last three metrics that we have, it's showing that inflation is not under control, and it's actually starting to tick up. So if the Federal Reserve at any point had a small inclination, and there was an inclination that they were going to stop being as aggressive and that they were going to be able to only do 25 basis points, this inclination is gone, and they're going to have a renewed vigor with a vengeance to keep inflation down. And how do you do that? You've got to keep raising the federal funds rate. So it's possible in the next meeting in March, depending on what we're going to get in the next CPI, PPI, and PCE, which comes in, I think CPI and PPI come in before and PCE comes in after the next Federal Open Market Committee. Depending on what we're going to get, probably we're going to get 50 basis points, not 25 basis points, which I foresee going on for a lot longer. Currently, the Federal Reserve says that they're going to be raising interest rates until 5.1% this year. And in the next meeting in March, Jerome Powell said that they were going to amend it. He said they could amend it going up or they could amend it going down. A lot of people said they thought they were going to amend it going down, and they would have said, hey, we're going to stop at like 4.75 or 5, whatever. I think this is going to go up. Probably somewhere around 6% right now, depending on what's going to happen later. Which means earnings are going to keep going down, which means interest rates are going to keep going up, which means borrowing money is going to be more expensive, which means the stock market in general is going to go down. Why? When we say that money is going to become more expensive, it's not just money is going to become more expensive, for you personally. You, your mother, your father, your family, your folks. It's not them. It's the mega corporations, because if they have to pay to borrow money 5% instead of 1%, that's a huge difference. And if they have to pay 7% instead of 5%, also a huge difference. I won't get into real estate, but I did when I did the full video. So the question is, what happens now? There's usually something called FOMO, which is euphoria, fear of missing out. When the market starts going up, everybody's rushing to go buy. But as the market is going down, nobody's rushing to go buy. And then when the market goes back up, people are like, I wish the market went down so I could buy. And then when the market goes down, you guessed it, nobody ends up buying. And I laugh at these people. I sold out of a lot of my positions a while ago. I shared that on this channel, and I am sitting on cash on the sides, and I will be making my move. I did say that I think the stock market, and for that reason the crypto market as well, is going to make a retracement. For a while, inflation was getting under control, and maybe that theory was going to get busted. But now it seems like that theory is going to come true, and the stock market in general is going to go down. But that does not mean that you can't find good deals. So let me give you a couple of options, and let me tell you what I'm personally doing. Google, for me, looks like a really good deal because it went down stronger than the broader market. It's like within 5% of an all-time low, 52-week low. If it hits a 52-week low, I'm going to be adding to my position. I started adding when it was just north of 90s, and I started adding when it hit 90, and right now it's like $89. I think Google is going to be a great value. I don't think Google is going anywhere, and I think that, this ChatGPT with Bing is overstated. I think there's going to be a major AI war happening right now between many companies. If you noticed an earnings call, everybody says AI, including our beautiful Palantir, including NVIDIA, stuff like that. So I'm going to keep a lookout for Google because I really did want to buy it, but I wasn't buying those 52-week highs. But now that it's come to 52-week low, I'm really looking into it. And if it goes below that, that's fine. I don't see that I can't time the market. So I'm looking at that. NVIDIA is trading at 25% or so below all-time highs. I think Google's trading like 29 PE or 20 PE, something like that, while NVIDIA's trading at like 125 PE. It's ridiculously overvalued right now, and they think they're going to get a next gold rush from artificial intelligence. I don't think that's going to happen. I'm not saying NVIDIA is a bad company. I am saying that it's overvalued. So what am I doing? I am shorting it. I'm actually buying positions in NVDS, which is an NVIDIA short ETF, which means for every dollar NVIDIA goes down, I make 1.25. It's a 1.25x short. So I'm shorting NVIDIA. I'm long on Google. Palantir, I already have my positions. I'm not really going to be adding to it. HIMS, I'm super bullish on. In general, I'm probably going to do a short on the SPY because I do think that it's going to go lower. I don't think the recession is going to come in 2023. I do think the recession is going to start coming in 2024. Why? 6-month Treasury bills, 5.1%. 2-year Treasury bills, you're getting like 4.8, but 10-year, it's like just south of 4%. Which means that we believe that in 10 years, inflation is going to go down. Why is inflation going to go down in 10 years but not in 2 years? Because of a recession. And because the Treasury yield is high for the 2 years and it's inverted, the market believes that that recession is going to come a little bit later. So that's why I don't think it's happening in 2023. Just my own personal opinion. You don't have to buy anything, guys. Don't rush. If the market is dropping, if the market is going up, there's always going to be deals. If you can't get a deal with, things going up, bet against it. If you can't get a deal with things going down, bet for it. There's always going to be tons of different options over there. Besides for that, I started investing in JEPI, which is a huge dividend play by JP Morgan Chase, paying out nearly 12% dividend. And it's pretty steady. It actually outperformed S&P, and I think it's going to keep outperforming S&P, especially in a downtrend. Finally, defense stocks. I think defense stocks are going to keep going up, even though they're near 52-week highs. What's the stock? There's an ETF, I think it's called DFEN. It's a defense ETF, and it's a leverage 3x. And if defense stocks keep going up, which I believe it will because of what's happening in Ukraine right now, America dumped like $50 billion already. They're going to keep increasing their defense budget. They're going to keep increasing de facto the defense budget of NATO, de facto the defense budget of Ukraine, de facto the defense budget of all of their allies. And where do you think this defense budget is going to? Where do you think all this money is going to go to? It's going to go to American corporations, American defense stocks. DFEN is a really, really good ETF. They don't hold Palantir, but that's okay. They hold like hardware defense companies. And the only problem is, and I didn't get into it before, and I said this, what I'm going to say right now is what I said a while ago. It's already on a run, and I want to invest when it cools down. DFEN never cooled down. It's still on a run, nearly a 52-week high, and I don't think that this is going to stop because even after what's happening with Ukraine, there's going to be a huge armament. And I also think that China is going to be like the next target, and they're going to be upping up their game, and so is America and all of their allies. So this is just what I think is happening. I am pro-long Google. I am pro-long defense stocks. I am short on the market in general, specifically SPY, and I am short on NVIDIA right now. These are my specific plays, and as a neutral play, you can get into something like JEPI. As always, none of this is financial advice, purely entertainment and education. Let me know down below how you are bracing for impact, and if you think that impact is going to happen. I think for sure, unless we get some good readings, this shit is going to go off a cliff. Have a good day.